Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Now you guys see why I love earnings season so much, right? Just a ton of names moving around today, a ton of headlines, a ton of action, and it's just a constant reminder why earnings season is so awesome, right? You know, it's like you got to do your homework. You got to find the setups, but you're you have like this calendar of events that you can look forward to. You can plan around, right? Like there's going to be news. You know that there's going to be some headlines. You know there's going to be volume, right? And today, well, it's going to be a busy week, but today really got things started. Overall, the markets are cruising higher, but a lot of pretty big moves in individual stocks, right? So yes, the averages are up a bunch, but there's still a lot of very stock-specific large moves, which is great because as an options player, I mean, you're constantly targeting those scenarios or those setups when you're trying to beat the price to move, right? You're trying to get an edge. And Twitter, I know most people probably had an opinion on it, right? I mean, it's one of those names where everybody kind of has an opinion on it, good or bad. What's interesting about Twitter, and actually last quarter, very similar too, is that it set up very well for the earnings combo trade, right? And I'm sure a lot of you guys know what I'm talking about when I say the earnings combo trade. We talk about this pretty often in our option sessions when we get together. I try to talk about it as often as I find the setup in these videos. But the earnings combo trade, long story short, it is basically two moves in one, right? So you get the earnings or the catalyst, right? It's not always an earnings report. I mean, sometimes it could be investor day, like Disney a couple weeks ago, right? So it could be an investor day, it could be drug data. Don't know what it is, but it's a catalyst. So it's a catalyst plus a technical move, right? So it's the combination of the two. One triggers the other, right? The catalyst, the priced in catalyst move triggers the technical move, right? So those are the types of scenarios, right? The earnings combo trades, those are the types of scenarios where you get the really sharp pops or drops, right? And you get the street or the options are priced in one thing, and you end up seeing a move that far surpasses that, right? And people are like, oh, well, why is that? Well, it's the combination. It's the combination of a catalyst and a technical move, okay? So what do I mean by that? It doesn't take a master chart technician here to see that Twitter was basically bumping up into a pretty key area of resistance, right? So this was last quarter. Like I said, very similar. This quarter, a little bit better setup overall, just because it had a pretty big move into earnings last quarter. This quarter, it was basically been sideways underneath this 35, 36 area of resistance, right? So coming in, you're thinking, okay, the stock, the options for this week were priced in at about 3.5, right? That's what the straddle went out. The weekly straddle went out about 3.5 last week. 3.5 points on the downside, kind of put it back into this congestion area, right? As it moved about 3.5 to 4 last quarter, right? Closed up around like 34, 35, dropped down to like the 30 range. So it moved 3.5 to 4, kind of in like the same congestion area, right? So maybe not like a ton of visibility for a huge move on the downside. It did move more than that last quarter, but you got moving averages here. You got plenty of support down there. So really nothing majorly interesting on the downside, right? What about on the upside? Well, 3.5 points on the upside would put Twitter where? Basically, with the stock trading at 34, 34.50 yesterday, 3.5 points up, 38. And what's above 38? Absolutely nothing. It's a wide open gap, right? Just a stock that has tried to bust through 35 to 36 4 to 5 separate times, right? So you get a priced in move of 3.5, which puts it well into the gap, and then you get a technical gap fill, right? So you get the catalyst that pushes it higher with volume, right? You can assume most of the times that stocks that are moving on headlines will typically have better volume. So you get the priced in move that puts it through resistance into a gap, and then you get the technical move on top of that, right? That really kicks in momentum to high high gear, right, and really drives it higher into the gap. So two, so you basically, if Twitter beat, you would assume that there could potentially be two for the price of one, right? So you get the catalyst move, and then you get the gap fill on top of that. So what happened? Well, anybody who hasn't been under a rock knows that Twitter beat because they've been talking about it all day on TV. Stock beat, and you had this really strong surge up into the gap, right? It didn't actually fill the entire gap, but it closed a very large chunk of it, right? So it was priced in 3.5, and it ended up moving almost 6, right? So not quite double, but in that vicinity. And the reason why, and a lot of people are scratching their heads like, why is it up so much? Well, in my opinion, it's up so much because you get the two for the one, right? You get the catalyst move, and then you get the technical move that really triggers, right? So after it gets through resistance here, clears the top of resistance, then the technical move triggers on top of that, and you get like the really sharp extension past that, right? So that's why I thought the upside scenario was a lot more interesting going into the quarter this time around, right? Talked about it in the update yesterday. I mean, there's this really obvious gap, and then if earnings were good and it triggered the breakout, then you have a gap fill and you get the technical move on top of that, right? So that's the earnings combo move. Twitter is a recent example, but there's been other examples, right? Like Disney a couple weeks ago, and that wasn't earnings, that was the investor day. But it's the combination of the catalyst and then a technical move. Sometimes it's to the downside, right? Walgreens a few weeks ago, that was one that triggered to the downside. So it's not always on the upside. In a strong trending tape, I feel like it'll happen more often, but there are instances where it happens to the downside. But these are the ones I'm always screening for. Like these are the ones, or I like to say, are like the bread and butter. What I look for when it comes to catalyst trades, it's the ones that have like these really interesting technical setups. With the catalyst coming up that could really ignite like that substantial pop or drop. All right. So I don't know if you can tell, but I'm all worked up over here. It's earnings season. I'm ready to go. Things are flying around, and it's really only going to pick up over the next few days, and actually through next week. It's going to be very, very, very busy with a ton of names reported. So buckle up. There's a lot to look forward to. All right. So questions, comments, what your thoughts on our Twitter or any trades that we may have done or may be open, definitely reach out because I'd love to hear from you guys, right? So have a fantastic night. Best of luck if you're playing anything, and I'll talk to you all tomorrow.